I'm getting way too often. Oh my gosh, Kira, I need to wait to buy or the interest rates. Well, today, guys, I have Lynn with Tiff, and she's going to talk about the cost of waiting. Yeah. Actually, let's jump right into it. Oh my gosh, Tiffany, thank you so much for taking the time out to talk about the cost of waiting to purchase. So, before we jump into all the things of, waiting, can you tell people how they can locate you? Well, not locate you, find you on all social media platforms. I'll also have all her information down below in the description. And then give a little summary about who you are, how long you've been doing lending, and all the things.
Yes, yes. Thank you again, Kira, for allowing me to come on this platform and just share a little bit about myself and just a little bit about some market news. You know, I love working with you. I love helping home buyers get to the closing table. So I am Tiffanie Saxton, also known as Lynn with Tiff. I've been with Verity Mortgage for, oh my gosh, it's been 5 years since last month. I've been with the same company. So we're based right here in the Dallas area, right north of Addison, and then we're headquartered in New Orleans. So as a direct lender, everything is in-house. So I'm on the front end on sales, helping with marketing, and then also when they go under contract, getting the best financing terms, the best interest rates, structuring the deal. But also too, all of my operations is in-house. So my processor, my underwriter, my closer. I'm very big and keen on relationships. That's literally the pivotal of my business. So that's one of the reasons why I've stayed with the company for so long. I just love the people that I work with, and we literally strive to get everybody to the closing table if they're under contract. So that's a little bit about me. And then as far as like finding me on social, my handle's pretty much across, all platforms. So Lynn with Tiff, Instagram is my main channel. Also Facebook, you can find me /Lynn with Tiff. LinkedIn, TikTok, all the things. So, but if you find me on Instagram, that's my jam.
Yes. Okay. She is doing the thing on Instagram. And I think if you want to get a little bit more personal, her TikTok is like more Jetty, which is her son, and
Yes.
all of that. So thank you so much. And I didn't know you guys were like headquarters was in New Orleans. So
Yes, yes,
that's
every
good to
year.
know.
Yeah, every year we do our sales rally in New Orleans. Our parent company is Eustace Mortgage. We've been in the business almost 70 years. So that's just a huge testament of just what we can do. And yeah, we've had Verity Mortgage for like the past like almost 10 years in Dallas. So we have a little footprint here and we're making some things shake.
I know, I love that. And just for people, just a little context to you guys, when she's saying that they have all the people in-house, that just means that they don't have any third parties that they have to wait on to see if they can get pre-approved or get fully underwritten
Yes.
approved.
Yep.
Because those are things that kind of can delay closing, which can make people feel a little, hesitant. But okay, well, great. Like I said, all her information will be below, guys. So make sure that you reach out to her if you have additional questions. Today will be a high overview over the cost of waiting. So, Tiff,
Yes.
the floor is yours.
Okay, so Kira, I mean, you and myself probably more than anybody, just since we're in the industry, we are getting just conversations, text messages, anything. Is it a good time to buy? And everybody in real estate, oh yeah, it's a great time to buy, 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 buy. Well, let's kind of put the numbers behind it and really see if it makes sense to purchase a home right now and buy.
Mhm.
Only because we're in an economy and we're in a market where everything is high, right?
Everything. Well, it used to be inflation, inflation. Now it's really like job stability is what I've been seeing.
Yes.
But I do get at least 5 times a week saying like, should I wait? And I always talk about the cost of waiting. So
Yeah.
yes, I just feel like this is a topic that people keep bringing up. So I was like, let me give the people what they want.
Yes, yes. I'm actually doing a class for my real estate agents on the cost of waiting. But for my buyers, the number one question that I always say is if it makes sense for you financially to own a home based off your monthly payment, then yes, it is a good time to buy. Right now, rent, it may be a little bit cheaper than your mortgage. However, rent is always going to increase year over year. Your rent might be $2,000 this year. It could increase to $2,250, $2,300 the next year, right? Where your mortgage at that same time could have been $2,100 and your rent was $2,000. So I always ask, hey, does this monthly payment make sense for your financial, being right now? With homeowners insurance included, property taxes, mortgage insurance, and the monthly payment. If you can withhold that monthly payment right now, do it. I know Kira, just from home prices, A house might be on the market for 350 this first year, 6 months, 12 months later, it might jump up $10,000, right? So that's
Or
just,
more.
yeah, that's going to increase your monthly payment if you decide to wait. So I don't ever try to pressure anybody, say, oh, get the house right now, da 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 da. If you financially are going to be tight or stretched, then maybe you do need to wait. Maybe you do need to get a second job or something for you to withhold that monthly payment. But if you can do it, do it. Because the longer you wait, the longer you're going to continue to throw your money away in rent. The landlord's going to be happy, right? They're getting their monthly payment from you every single time. And guess what? You have no say so in saying, hey, I want to keep my rent the same amount. Well, the landlord, they're the owner of the property. Oh, inflation, cost of living, everything's increasing with the market. So I got to increase it by 25%. If you still want to live at that property, you don't really have a say so. You're going to have to pay for it.
Exactly. And honestly, I'm a landlord. So my condo, I went up $300 this year. I mean, inflation is real, and you're right. I mean, you rather have a little bit of ownership of like where you're going to be, not have some landlord just be like, hey, I need you to move out, or hey, I need you to go up. So let's jump into what it looks like, what it costs to wait if you're at the 350 range, and then maybe we'll do 500 and kind of explain that.
Perfect.
Does that sound good?
Yep, I have a scenario put together, so let's break it down what 350 looks like. All right, so thank you so much. This is a scenario that I did through MBS Highway. It's a marketing software tool that I have as a loan officer. But essentially, I want to kind of break down the biggest thing is appreciation gain if you decide to wait a year or 2 years purchasing that same home at 350. So just in general, if you look right here, the appreciation gain, if the house right now was 350 and you decide to wait 1 year, right? Oh, I'm waiting for rates to drop. I don't know where I'm going to be. I don't know where the market's going to be at. That same house from 350, just based off market statistics, is going to jump up about $8,000. So now you're looking from 350 to 358. And then 2 years later, it jumps up an additional $10,000 from the 1 year. So now you're at 368, which is almost a full $20,000 more you're paying for that same property if you were going to buy it the first year as opposed to year 2. So that's one difference there. If you scroll down to the next page, I highlighted a certain areas that I want to showcase here just as far as a breakdown. So we talked about the property value increasing, the loan amount. On an FHA loan, minimum down payment is 3.5% of the sales price. So 350, you're looking at 343. You're going to finance a higher loan amount if the sales price is higher, both in year 1, year 2, right? So that means your principal balance will increase. People are possibly saying, right, just in this scenario, if they're waiting for interest rates to drop, let's see what interest rates drop from the first year at 7% down to 6%, a full point in year 1 and year 2. So we have that scenario. If you scroll down a little bit lower, look at the monthly payments, right? The monthly payments aren't really that much of a difference. Yes, it may be a little bit lower because you are getting a lower interest rate, but don't forget the higher the sales price for year 1 and year 2, right? So it might be a difference of like $100, your first year, but you're financing a higher loan amount because the sales price went higher. Okay. Same thing in year 2. You're basically almost paying the same payment because of how much it increased, right? But the biggest thing here too is that you're losing so much equity. Year after year, the home is going to appreciate. Real estate is the easiest way for anybody to gain wealth just by owning your property. You don't have to do anything. You're already building wealth over time. So if you really are just kind of gung-ho, oh, it might be a difference of like $500 on your monthly payment waiting for a year. It's really not. It's really not. It's pennies on the dollars, guys.
Exactly. And I was going to say too, you can always refinance. So let's just say you got into it for the 7% interest rate. You can always refinance down to the 6s. But from economists, they're saying we won't be low 6s until 2027.
Yes.
So I think even if you did refinance or refinance again in 2027, I just think that you would gain so much more equity now than you would then. So I love the fact that you explained the equity. I love the fact that you explained the payment, because honestly, if you're not paying cash, the full amount price doesn't matter to you. It's the monthly that you are marrying more than anything. So, okay. So do we want to jump right into the 500,000, or do you feel like there's any other questions or anything that buyers also say that you've been getting often?
I will say a positive though, like buying now in this market, I've seen a lot of contracts come across my desk and with seller concessions. So seller concessions is basically just like funds that the seller's willing to provide to the buyer to help them get to the closing table, whether that's going to cover closing costs, but more importantly, can you also use those same funds to buy down your rate? So if you don't want to buy down your interest rate, maybe it doesn't make sense to recoup that cost in a certain amount of time. If you're essentially getting like money from the seller, utilize those costs, right? A huge thing that we're seeing now is what's called the 2-1 buy down. So
Yes.
the 2-1 buy down, it's a fee that the seller has to pay, and it's kind of contingent upon the sales price of the home. But it is a fee that the seller would pay. It's part of the seller concessions. But if the interest rates right now are 7%, your first year is going to drop down a full 2 points. So your first year, your interest rate will be at 5%. The second year, it'll jump up to a 6%. And then that third year, and for the next 30 years until you refinance, it will remain at a 7%. So that kind of helps lessen the blow if you don't want to purchase right now because of rates. And sellers are giving concessions. Builders are providing concessions. So utilize those funds in your best advantage when it comes to your financial monthly payment.
Hold up, wait a minute. Okay, so if any of this has resonated with you already, make sure that you subscribe, like, and share with a friend. But not only that, guys, let's plan. Set up a strategy session so that we can help you from where you are to where you want to be. Because remember, if you fail to plan, you're preparing for failure. All right, we're here to try to help you. That link is in the comments and in the description. Schedule a strategy session. All right, let's get back to it. Amen to that. And what I've realized too, when you said that, like the 2-1 buy down, 3-1 buy down, there's so many different programs. Now that's something that she can't really go into deep, context in, but definitely reach out to her. I would love for people to schedule a strategy session. And if you schedule one from this call, we'll both be on it. So she can answer any lender questions. I can answer any realtor questions, because at the end of the day, you got to create a plan for yourself. Because if you keep saying, oh, next year I'm going to buy, oh, next year, and it's like next year comes, like we're already halfway through the year.
Yeah.
So if you haven't gotten the raise and you keep thinking you can outsave inflation, let me just help you wake up. Hello, wake up. Because I'm telling you, it's a little bit more challenging than you think to outsave inflation. So if you have a plan and you work the plan, we can help you actually get into something. And like Tiff even said in the very beginning, we do our best to make sure that if you go under contract, we get you to the actual closing table. So, and that's what it's all about. No one wants to start it and not finish it. So, okay, let's jump in and let's do one more scenario for a $500,000 home. Let me do my sharing.
Perfect. So this scenario is based off a home that's worth around $500,000. And I always have people say, you know what, Tiffanie, thanks so much for pre-qualifying me, but I think I'm just going to wait about a year. Well, in that 1 year, if you scroll right to the very top, in that 1 year, benefits in buying right now, it's going to be around almost $16,000 in equity that you're going to own in your own home just by owning it. You're not doing anything. You don't have to go out and get another job to get that $16,000. That's just from you owning your property. So that's in 1 year. If we can scroll down a little bit, I do want to show the difference as far as the sales price, right? That same property that you purchase now, if you decide to wait 12 months, it's going to jump up 20 grand. So that 500,000 easily goes up to 521 just based off appreciation and home values continuing to increase, right? We don't have any control over that. So let's continue to go down, then I'll break down the monthly payment. Okay, so 500 to 520 just in 1 year. The loan amount was 5% down. Your loan amount will be a little bit higher just based off the sales price, right? Same thing with the down payment, very minimal. If interest rates do drop by 8% from 7 to 6%, we have that scenario there. Let's scroll down to the monthly payment, and this is on conventional financing. The monthly payment is going to look around $4,600, so $4,400 if you do decide to wait with the with the home pricing increasing from 500 to 520. So your monthly payment does decrease, around 150 bucks or so, right? Cash to close does increase a little bit because you are financing, you are purchasing a higher price home. But the biggest thing here though is it's $150 difference in monthly payment, But how much is that going to recoup the cost of you not owning $15,000 worth of equity and appreciation in that 1 year? That's just 1 year, right? We're not talking 2, 3, 5 years. That's 1 year, $15,000 that you guys are missing out on, right? So again, your landlord, they love it. They're going to be making money because they own the property if you're renting it. Biggest thing is that you guys want to create generational wealth for yourself. So own the property if it makes sense for you, right? If you have an additional $150 that you could spend per month on your monthly payment just for now, right? You can always refinance. You know, when the 2020, 2021, 2022, no one knew the rates were going to drop as low as they did, but we had a big refinance boom. I promise you, when the rates jump down to hopefully in the low sixes, high fives, refinance boom's going to happen again. Another thing too, I forgot to bring up. If you do decide to wait and the interest rates do drop to like the low sixes, the high fives, not only you will be ready for the market, but everybody and their mama's going to be coming out for the market, right?
Yep, so much competition, which, you know, I like that because more people were buying. Hello, but it's harder for you. It's going to go back to that multiple offer situation. And then it already jumped up in price. Now you're having to pay even more because you're competing against all these other people who have been sitting on the fence just like you.
Correct.
Yeah. And I like to say this too, and I feel like I say this over and over, but what is it? Leaders are repeaters. When people are being cautious, you be greedy. And when people are being greedy, you be cautious. Yes. And I think right now people are being cautious. So this is the best time to jump into the market to actually like be greedy and get some. I mean, I just got a person for a new construction, and they got all closing costs paid for.
Oh my, see, look, like what are y'all waiting on?
So I do think that it is, you know, case by case scenario, depends on where you are. But guys, let's be ready so we don't have to get ready.
Come on. The opportunity is there. So I would always say if you don't know where to start, always consult with a lender, have them break down the scenarios just like I did, you know, side by side, see if it makes sense. But also too, just look to see how much equity you're going to be building by becoming a homeowner versus waiting on the sidelines.
Yes. Thank you, Tiff. This was great. Yeah. And I hope this has just brought you guys some value that can really just take your mindset to a different level of home ownership, because when you fail to plan, you prepare for failure, guys. So let's go ahead and plan what exactly you want to do with home ownership. All right. Well, thanks, Tiff. Once again, tell them where they can find you online. And once again, I'll have it down below.
Yes. I'm Linwood Tiff across on all social platforms. It's right there, Linwood Tiff. Be sure to schedule a call with me on my calendar link if you want to have a strategy call or even just a consultation. If you're interested in getting pre-approved, I can do a soft credit pull on you. So that way there's no impact on your credit. And, you know, put a plan to help you become a homeowner. That's what me and Kira are here to do.
And Tiff, I love all the, you know, breaking down everything, but do you have a story that you have personally had where they were trying to buy, but decided to wait, and now they're not as, you know, they're happy, but things have gone up?
Yeah. So it's funny. I actually just helped them close on their home last day of May, so like May 30th or whatever. I got their initial loan application, I think back in 2022. So 2022 rates were like in the 3s and the 4s. So they were able to qualify for, I believe, up to like $500,000 at that point, just based off debt to income ratio, lower interest rates, right? Well, not only did interest rates increase since that time, but the home prices have increased as well. So that same type of home that they wanted for $500,000 was now like up to like $650 or so. And then with the higher interest rates, you know, that impacted their debt to income ratio. So now the max I could qualify them for was only $400,000. So they were very eager to at least still move forward, get into the home. So we were able to get it done. But I always tell people, like, if you complete an application with me, you know, don't try to sit on the fence. I understand you might want to wait, but there is really no way to time out the market. That's what I've learned being in this industry. There is really no way to time out the market. There are so many moving factors involved, especially with just like new government, presidential elections, just people in charge. There's just really no way. So if it makes sense now, don't wait, buy. But they're in a home now and they're homeowners, and now they're building that equity over time.
which is what it's all about, is that we want to help you get to the end goal, but at the end of the day, you have to make that decision for what makes sense for you. So that was good. Thank you, Tiff, for that.
You're welcome.
Okay. I know that was a lot. That was a lot to digest, and that's okay. I do have a future homeowner brunch that's coming up in September that Tiffanie will be there too, being one of my mortgage partners who will be speaking. Also, set up a strategy session with her or me. We want to help you guys, get to your goal. We want to help you guys get to your goal. That is the whole point of this channel, is to help you confidently invest in yourself through real estate. So if you don't know, I am Kira Ford, your real estate cheerleader, aka your favorite Dallas realtor, and I trust that this video has brought you value. So make sure you share with a friend. 1, 2, make sure you like, subscribe, and once again, share. All right, well, we'll see you next time.
Oh my gosh, there she is. It's Kira Ford. Kira Ford. You don't know what? Never heard? Oh my gosh, she's played every time.